Hello and welcome to Frontier View's Outlook on Saudi Arabia for 2021. I'm Zeynep Kosereisoglu. I'm the Director for Middle East, Africa and Turkey Research, and I'll be sharing with you our expectations for the Saudi economy and the implications on various sectors. Saudi Arabia presents the largest opportunity for most multinational companies across sectors due to its kind of optimal combination of its large public budget, relatively sizable population with higher than MENA average income levels, and of course its overall stability. And most companies that we're working with are actually focusing on Saudi Arabia in 2021 to protect and grow the core market in their portfolio. The Saudi economy, unfortunately, has come under significant pressure in 2020 from the dual shocks of that oil price crash and COVID-19, but it will improve gradually in 2021 and into the following years, as you can see from our forecasts on this slide. 2021 will see some slightly higher exports as global demand and oil prices pick up, almost flat government spending as the budget envisions consolidation and procurement, a rise in investments, especially on the public side, and mainly focused on mega projects, and a moderate recovery in consumption. Fiscal consolidation and slow growth in the private sector, especially manufacturing, will definitely need to be taken into account on the negative side. And the main challenges that we need to manage in Saudi Arabia in 2021 will be that ongoing unpredictable payments timeline, that uncertain end demand outlook for many businesses, and the cost fluctuations that we'll continue to experience in 2021. And so in the next hour, I will be sharing with you our outlook on Saudi Arabia, starting with a macro introduction and then moving on to key sectors before ending with some critical actions to take at the end. So let's get started with the macroeconomic outlook. As you can see here, Saudi Arabia's pace of recovery will be largely in line with the broader global average, with the economy likely returning to its pre-COVID size in around 2022. If we look more in detail, however, in this slide, various sectors will recover at different timelines. For oil and gas, we expect to see moderate demand with slow rise in production and moderate levels again of investments in that sector. For construction, residential is performing slightly better, and commercial is likely to recover driven by government projects before the civil work side. Financial services are again poised to recover in 2021, but more moderately. And then when we look at the non-COVID healthcare sector, there will be some pent-up demand going into the spring of 2021, but we expect normalization in the industry into more Q3 of the year. Hospitality is likely to recover one of the latest, while we expect kind of FMCG demand to have normalized into early 2021 actually, and some pent-up demand for durables and non-durables that can emerge in the second half of 2021. We'll go into more detail in the coming slides. But also we want to pause here and talk a little bit about the political environment. A few shifts have happened in the political arena. Tensions could increase with the upcoming Biden administration, but we don't expect a serious hit to the economy from any potential sanctions there. A small breakthrough is possible with Qatar as well, with potentially Saudi Arabia opening up its airspace to Qatar, but of course a very kind of full resolution of that blockade is still not an imminent possibility, we believe. Turkey has stepped up its efforts to improve relations with Saudi Arabia, but a clear and immediate improvement is quite unlikely. And then when we look at Israel, normalization with that country, we still think is unlikely in the short term, although we've seen numerous Arab states start normalization. Clearly, a two-state solution seems to be a very strong demand from Saudi Arabia. And another very important factor we want to look at is vaccination. On the vaccination front, Saudi Arabia is making efforts to obtain vaccines through the COVAX facility, but also we've seen that the Saudi Food and Drug Authority has approved the registration of the Pfizer-BioNTech COVID-19 vaccine. The authorities will release more details on timelines, but the general goal seems to be to vaccinate the majority of the population by mid-2021, which we would expect some delays to this timeline. Now, if we move on to kind of the macroeconomic outlook, the fiscal position has, of course, deteriorated in 2020. Debt levels have increased, but they're still at manageable levels. So we are far from concerns around debt defaults, for example. But the simple rise in borrowing costs will drive consolidation in spending. Non-oil revenues have been rising, as you can see here, but oil revenues fell around 33% in 2020 and still made up 58% of total revenues in the first 9 months of 2020. So this is a retreat from the 66% share oil revenues had in the 2019 budget, but it is still a high number, and actually we would expect that to increase in 2021 with that rise in oil revenues. And part of that ability to raise non-oil revenues was due to the tripling of the VAT in July 2020. That VAT increase has brought up a headline inflation to around 6 to 7%, where we expect it to stay until July 2021. After that, we would expect the high base effect from the previous year to cause headline inflation levels to drop. Now, I think with any economic outlook in Saudi Arabia, we want to start with the government spending and public sector outlook. When we look at 2020, unfortunately, total revenues fell 25%, while the government put most of its spending power behind COVID-19 management, with a 16% increase in healthcare services and 20% increase in public administration. And while most COVID-19 management spending has occurred, we think the government will continue prioritizing high quality medical purchases focused on COVID-19 throughout the first half of 2021. So we should still anticipate rapid changes in procurement resource allocations and an unpredictable spending outlook to continue for at least another 6 months. And moving forward, the government is projecting the budget deficit to register 12% of GDP in 2020, and then aims to reduce this to 5% in 2021 and 3% in 2022. And then by 2023, hoping it would reach around 0.4% of GDP, which all of these plans will be driving a reduction of expenditures in the coming 3 years. The 2021 pre-budget statement focuses on further enhancing spending efficiencies, continuing the mega projects, entertainment, tourism sector investments, and the housing and quality of life programs. Plus, the document really clearly emphasizes the role of the National Development Fund and the Public Investment Fund as key investment drivers rather than the government treasury itself. Privatizations are also projected to accelerate. All of these are showing us that the government is looking for ways to shift the burden of kind of demand generation in the economy to outside of the traditional treasury. The loans provided to the private sector by the banks will continue to be supported by the government's development funds as well. So the newly approved Tourism Development Fund and the enhanced Saudi Exim Bank operations will continue into 2021. And there was also the private sector stimulus plan initiated in 2020. This is also outlined to continue in the following year. And the recovery of government fees for SMEs, that was an initiative, is also undergoing a new cash flow plan. So quite a bit of ongoing private sector support that we need to be expecting. And changes are coming to the business environment, where we do need to monitor for further details on the newly announced formation of special economic zones, and some very vague and non-committal statements about potentially being open to reviewing the VAT, which was a very, very high level non-committal announcement, so we don't want to read too much into it. And then minimum wages have been increased for 2021, and whether any further consumer supporting measures will be taken, we should definitely be watching out for that. Now, beyond the general kind of government spending priorities, let's take a look at the healthcare sector. Despite, and you can see here on this chart, despite plans to cut it in 2020, the healthcare budget actually, the healthcare spending side actually grew 16%. And this was actually through increased support packages to health facilities, the Ministry of Health Endowment Fund, medical supply agreements with China, and investments in COVID-19 testing and treatment capacity in existing and new hospitals. ICU capacity, as you can see on the chart, was also rapidly increased. And Moving forward, COVID-19 focus is likely to stay with us for the next 6 months, especially on ICU capacity and vaccine procurement. But at the same time, spending rationalization plans are here to stay. The use of PPPs and privatizations may also accelerate with this higher fiscal urgency right now that we have with the severe drop in revenues in 2020. And in 2021, we would expect public health expenditures to normalize from the high base effect of 2020 and the private expenditures to grow from their contraction again in 2020. So it's more of that base effect that you are observing with our forecasts here. This shouldn't hide our view that private insurance expansion will likely remain moderate in 2021 before growing probably a bit more strongly in the following years as the economy picks up. And as COVID-19, unfortunately or fortunately, depending on how businesses are looking at it, has confirmed to the Saudi government the benefits of a more centralized procurement. So we would expect NIPCO to remain a crucial kind of player in ensuring cost-effective procurement processes. And price pressures will surely intensify, and unfortunately, payment delays are also going to be continuing for the majority of 2021. Clearly, localization will also increase in importance. And the current environment has definitely increased the importance of primary healthcare and digitalization in the healthcare sector, both of which will be attracting government attention and resources in the medium term. And in the long term, some of the traditional areas of concern, such as diabetes, oncology, cardiovascular diseases, will remain as priorities. Preventative healthcare and digital solutions expansion will also be clearly very important. And despite fiscal pressures, bringing in high quality and niche solutions will be key, while trying to save probably on the generic side. And it will be important to monitor how the cost pressure affects the country's pricing structure in the future. And clearly, COVID-19, as I mentioned, will continue to confirm the role of NIPCO. And as we know, there were plans to set up a cluster-based model across the kingdom. The legal preparations on that will continue. Of course, the lack of progress on privatization and policymakers' distractions are delaying the implementation of that, but clearly that will remain a priority, as we've also seen from recent healthcare conferences as well. The previous trade wars and now COVID-19 are likely to accelerate a trend of supply chain localization across industries across the world. And with Saudi Arabia having one of the larger pharma manufacturing capacities currently in the region, the country could see a rise in domestic production. The opportunity can be an attractive factor for many companies, but of course, IP protection, labor costs, and the general regulatory unpredictability still remain high levels of concerns for a lot of our clients. And lastly, but very importantly, increasing public sector digitalization was already a goal for the government, and this is accelerated across sectors, including healthcare. A variety of solutions have already been adopted, as you can see on the slide here, mainly to improve the reach to patients, but also gradually to improve healthcare services overall as well. And with that, we can turn to another critical sector in the economy, the oil and gas sector. Brent crude oil prices will average at around $50 per barrel in 2021 versus $40 in 2020. Currently, prices are hovering at around $48, and short-term fluctuations will be driven by lockdowns versus that vaccine announcement. So clearly, there's still a bit of volatility that we need to be keeping an eye out for. In 2021, the oil sector will perform slightly better with moderate and gradual increases in demand and therefore production. If economies and global travel can recover substantially by mid-2021, then oil markets will definitely perform better, but a more gradual recovery pace into late 2021 could weigh on prices and could impact, or let's say, kind of slow down some of the production increase plans that the government may have, or let's say, the oil companies may have. And maintaining and raising production capacity is important for Aramco alongside their diversification investments, however. So major reassessment of investment plans have had to be made in many areas, but also numerous MOUs have been signed in non-oil and gas related areas, which must be monitored. So clearly, there's a bit more of a focus on the expansionary and let's say diversification efforts from Aramco. Let's take a quick look at the construction sector. Now, the sector unfortunately was just recovering as we were entering early 2020. Throughout 2019, we had seen some improvements, as you see on the number of building permits, for example, in 2019, but it definitely got severely hit in 2020. The chart on the right clearly shows credit growth to the industry has really lagged the economic average and was minimal throughout the most of 2020. And clearly, the sector came under severe pressure. Project awards in Q3 of 2020 were around 80% lower on a year-on-year basis, and we would expect, on average, around 30 to 40% lower project awards totally for 2020. And the industry faced higher operating costs, COVID-19 related operational challenges, delayed payments, and cash flow strains. And there was a real risk of real estate firms and developers going bankrupt throughout the year. Some demand existed for warehousing related projects, for example, also on COVID-19 capacity projects in the short term. And the projects that were awarded, as you can see on the slide here, were mainly in the power, utilities, transportation, and the real estate sectors. And moving forward, tourism, entertainment, housing, and mega projects are definitely priorities for the government that will be driving some of that construction activity moving throughout 2021. And we definitely want to be watching the Public Investment Fund. A lot of companies will be watching the PIF investments into the kingdom, not outside. Clearly, it's going to be more of a focus for the PIF in 2021 and 2022, and it will be very important to watch that space for more opportunities. And some activities definitely picking up in the Red Sea development project and could be as well. And into the manufacturing sector itself, unfortunately, businesses were definitely challenged by a very uncertain demand outlook, the financial pressures of a halt in revenues during 2020, and the ripple effects of a severe drop in public procurement and project expenditure. So limited credit growth on the right here as well can show the additional challenges the industry faced. And as seen by the Purchasing Managers Index here, activity has begun to pick up. Businesses will continue to receive support in the form of loan repayment delays, wage support for Saudi employees, and other measures. But these unfortunately will be insufficient to recover investment capacity in 2021. Rather, this will be quite gradual. And in the medium term, the National Industrial Development and Logistics Program and the In-Kingdom Total Value Add Program will be the main drivers of that manufacturing sector. This, of course, is going to be taking a few years ahead of us to really gradually unfold. And we can see here on the slides with more detail that the automotive, military industries, pharmaceutical and biopharmaceuticals, food and beverages, and medical appliances and agriculture were being prioritized, highly selected, chemicals, logistics as well, as part of the government program to really choose these industries to attract investments into those. So we will need to be continuing to monitor the selective investments that are coming into those areas. And then the latest MOUs, for example, by Aramco that I've just mentioned, show some more focus on recycling, on 3D printing, automation, and information technology, chip manufacturing, and an ongoing focus on metals, such as steel. Digitalization trends across businesses are also expanding. So clearly there are efforts by public entities to also expand the manufacturing capacity inside the kingdom. And in the short term, though, because those are going to be more of that medium to long-term opportunities, in the short term, manufacturing in machinery and equipment, clothing and electronics, all of these sectors unfortunately fell around 45% in July of 2020 and actually remained in negative territory since then. This will begin to improve, but will probably return to mild growth potentially in Q2 2021, and a more substantial recovery into the second half of 2021. The short-term better performers are likely to be food and beverages, PPE, generic pharmaceuticals, and military equipment manufacturing as well. And let's also take a look at a few of the service sector industries, starting with the financial sector, which also came under pressure in 2020. Major banks have mostly reported drops in profits. The Saudi sovereign and bank ratings also face some downgrades due to lower economic activity, but overall the industry, we believe, is healthy, and lower provisioning, high mortgage demand, and low funding costs are supporting the banks. And 2021 outlook is relatively better as well, as the economy shows some improvements and demand for loans should also start to increase. And clearly, again, amongst the financial sector, there's an important drive to increase efficiencies, streamlining more and more of that technological solutions into their internal processes. So this industry will continue to be an important kind of opportunity for many B2B firms. On the information and communications technology side, we also believe there will be some strong demand continuing. Firstly, the Kingdom does offer one of the largest opportunities, just in terms of the size of the sector. But second, Vision 2030 goals for this sector also signal to multinational companies an increasing government focus. The goal of nearly doubling the IT sector and its workforce in the coming years is a clear one. And initially, the public sector, the financial sector, oil and gas sector should lead expenditures in that ICT, but the rest of the private sector should also follow in the medium term. E-governance, e-commerce, e-health, but also AI and robotics are all important drivers of the industry as we move forward. And lastly, on the real estate side, the trends have definitely diverged in 2020. Although the government had paused some of its mortgage support programs for government workers, residential real estate prices and retail loans for real estate did grow in 2020. But a similarly COVID-19 driven trend was seeing the commercial side of the industry really face further declines in prices and very weak credit growth. So this trend, unfortunately, we believe will continue for most of 2021, and Q3 2021 onwards could be where we start to see some pickup on the commercial side. And with that, let's also take a look at the consumer sector outlook. An important impact of COVID-19 and the severe slowdown of the economy has been on employment. Unfortunately, unemployment among Saudi citizens has increased from 11 to 15%. And in the meantime, consumers do remain concerned about COVID-19 and are hesitant still a little bit about the out-of-home consumption space. So Saudi Arabia has been one of the latest countries to lift the COVID-19 restrictions, meaning its opening up has started more around September, lagging, for example, the timeline we saw in Europe by approximately 2 to 3 months. So while daily case figures remain low in December, the risk of them rising in Q1 2021 and some restrictions returning should be monitored closely. We have some agreements in terms of vaccinations, but of course administering them, etc., it's going to take time. We're still not there yet out of the COVID-19 crisis. And then, of course, very importantly, is the expat population. We expect a significant decline to have occurred in the population in 2020 of around 900,000 expats. In 2021, the expat numbers actually should increase in the second half of the year with higher construction and service sector employment. So we are expecting a minimal increase in the numbers, not further declines, and that minimal increase will be coming from the lower skilled and lower income side. The government's previously announced measures to suspend public sector allowances, triple the VAT, suspend the public sector mortgage support program had actually caused a drop in consumer confidence. Now, this did stabilize in Q3, and actually with meaningful improvement we expect in confidence into Q2 of 2021. But of course, consumers still need to adjust to the new VAT, as well as see some improvements in the government's fiscal position and overall outlook for the economy, alongside easing their COVID-19 concerns for really that confidence to return. And As you can see from the chart here, Saudi consumers pulled forward a lot of their spending plans, causing a major spike in point-of-sale transactions in June of 2020, in an effort to purchase some semi-durable and durable products before prices increased with VAT implementation. But data post-June into late 2020 shows a decline in those transactions since then, and spending patterns we think are likely to moderate in early 2021. We are expecting more improvements into the spring months, basically Q2 2021. And maybe one very important kind of positive factor to remember here is the strong growth in online sales. Lockdowns and mobility restrictions, of course, boosted e-commerce under COVID-19, and we think that this trend is here to stay. Saudi Arabia provides an optimal market for growing online sales with its physical and technological infrastructure, moderate to higher average income levels in the Middle East, and of course very high online kind of penetration in general. So these structural factors will ensure e-commerce continues to grow strongly post COVID-19. At a bare minimum, we are seeing that executives aligning their organizations internally on the size of the opportunity, determining the strategic e-commerce role, beginning to make some cost-efficient investments into their internal capabilities, strengthen their relationships with large online players, and aligning with their distributors as well. But other changes in consumer behavior, we really don't want to be ignoring them. The kingdom is still implementing reforms in the background that will expand private sector employment of Saudis, and this can result in numerous changes in behavior, from spending more on certain areas like education to become more attractive in the private job market, to even, for example, having less time for shopping. So clearly there's going to be ongoing changes in consumer behavior, and all of these qualitative shifts we also want to be integrating into our plans into 2021 and beyond. And so with that, I'll wrap up the outlook for Saudi Arabia, and we'll share with you some of the polling results from our executive roundtable in November, which actually showed that executives at the Middle East, North Africa, Middle East, Africa management level are still quite concerned about a slower than anticipated demand growth, which clearly will necessitate some scenario planning. And what we've observed is a general caution in terms of setting targets for 2021. Even companies that have been performing better in 2020 are trying to keep some kind of conservative and kind of more sober expectations for growth in 2021. I also see that executives are focused on improving receivables and adapting their offering to changing market realities. Also in line with that, of course, adopting, or let's say responding to the risk of customers downgrading as well. And overall, we have been observing relative, let's say, hesitancy with investments, but still there seems to be some focus on allocating resources, whatever is possible, to enhancing local team skill sets, and definitely on online marketing and virtual engagement infrastructure. And what we can kind of conclude with is that as many other MENA countries struggle, Saudi Arabia will actually need to compensate for lower growth in other portfolio markets. So this is unfortunately likely to create some higher competition. So we have to be definitely closely monitoring competitor moves to increase presence in Saudi Arabia, identifying resilient customers, whether they are consumer income groups, faster recovering sectors, or higher priority government project areas, will be key to capturing that kind of gradual growth we expect throughout 2021. And of course, on this note, supporting distributors with demand forecasting, customer segmentation, that is going to clearly be needed. And then, of course, aligning with consumers' increased e-commerce use, the government's digital transformation efforts, and businesses' customers' needs for cost savings will also be critical in adapting the offering to Saudi Arabia. So, of course, for more insights on Saudi Arabia, please refer to our online portal, frontierview.com, and don't forget to use our mobile app, FrontierView Mobile, for frequent updates on Saudi Arabia's outlook. Thank you for your time.